Time to check in on the latest on the ag commodity trade by going to Chicago, and we'll find out what's going on right from the trading floor, where we have Scott Gecas standing by. He's with Longleaf Trading, and he joins us right now. What's the word on the floor today, Scott?
Everything is going to be focused on all the trade war talks between China and the U.S. You know, their tensions are easing a little bit. There's still that NAFTA concerning a little bit. You know, Mexico and China, they're not really in a big hurry to get that NAFTA deal done. So we're going to see how all this plays out this week. It's a very heavy news week, so we're going to see how that all plays out. As you can see, though, today with the soybean market popping the way it has, you know, as I was walking up, it broke that 1020 level. That's a very significant level. As soon as it broke 1020, it popped all the way up to 1024. So with volume, I expect anywhere, any close above 1020, we have room to run all the way up to 1050, 1060.
How significant is that 1024 level?
Very significant. A lot of open interest on that line. That's why you've seen, as soon as it popped that 12 or that 1020, you've seen a big spike all the way up to 1024 within a few seconds. So big spike on volume, increasing open interest is up to the upside. I expect this to continue to run unless if anything negative comes out with the trade war talks.
Now, we've been mentioning that a couple of times today, but the May contracts go off the board here in just a few minutes. Is that going to have any effect on the trade?
I don't think so. The way that they're moving, the way they're going higher, I don't think that's going to have any impact, you know, the expiration going into the next few days.
All right, let's jump back a little bit and take a look at the corn market, get everyone updated there on the futures trade. So on the corn board, we have July now 3/4 higher. We're trading at 397 1/4 per bushel. December up 3/4 at 415 1/4. But the soybean market, like you were talking about, strong gains today. It's been hanging in there that way all day long. Right now, on the soybeans, let's look at July. It's 20.5 higher. 1023 3/4 is now the current trade, and that is well off our earlier low by 22 cents now. And November up 14 1/4 at 1028.5. What about the wheat trade, though? Scott, we have big losses in Chicago wheat. July down 4 3/4 at 494, and Kansas City has been under pressure today. We have the July KC wheat down a nickel at 513. You have to admit it has come off of its lows by about 4 cents, but still kind of weak in the knees today.
Yeah, and the wheat trade in particular, the good versus excellent crop came out. It was, you know, 34% versus 51%. That's a little significant. You know, the ending stocks came in line from last Thursday's report, but it's still the fourth consecutive year in a row that it higher and higher and higher. So traders are net long. That break of about 495 is a little bit bearish, so we're going to be keeping an eye on that 495 level.
I want to take a look at Minneapolis wheat, too, on the spring wheat trade. Here we have the July down 3 1/4 at 601 3/4, but it's getting kind of tough to finish off that spring wheat planting, isn't it?
Yeah, that's exactly right. Everyone's going to be focusing on what's going to be coming out, that the good versus excellent report, you know, poor versus very poor. Everything's going to be looking at those numbers moving forward in the next few days here.
Okay, in the cotton market right now, you have that July contract. We'll bring that one up for everybody. It's down 77 points, and we're trading at 83.85 per pound, and December down 42 at 79.82 cents per pound. Scott Gecas is our guest, and we'll return in just a moment. We'll take a look at what's going on in this cattle market and the hog trade when we come back. And we're talking with Scott Gecas of Longleaf Trading in Chicago right now. And as we turn our focus now to the livestock trade, it's a tale of two trades here. We have the cattle going one way, we have the hogs going the other way. Kind of a surprise how much divergence there was between those two today, wasn't there?
Yeah, it's really odd to see those two move in opposite directions. Usually they move in tandem. You know, with the cattle market, you know, USDA lowered their second quarter production from 10% to 5%. Production's still up 5% versus last year, so we're going to see how that is going to still play out. Still seeing strong seasonal demand. I was actually at the grocery store this weekend. I went to 3 different grocery stores, and it was a very small selection of beef going into it. So, you know, there's still that supply concerns. I'm not seeing it. I see people still buying beef at bulk going forward, but you know, traders are still net long, increasing contracts. We're still going to be watching that 106 level as far as support and resistance in the cattle market.
All right, on the live cattle trade, excuse me, this morning we had some big losses. It's maintaining that right now. Triple-digit losses. We have June live cattle currently down $1.94 on the day. We're now at 105.68. That is, you know, even that is basically about $1.30 off of our earlier high of the day in that June contract. Now, the August is down 157 right now, and it's trading at 102.85. October down 148 at 106. Even that's $1 off of its earlier high today. Let's take a look at the feeder cattle market, and on the feeders, we have the nearby May contract trading $2.02 lower at 136.40. The August is down 255 at 141.35. But just to make Scott's point here, you look at the box beef cutout values that came out a short time ago, and they're both higher for choice cuts and select cuts. We had choice up 55. We had the select cuts up 96 cents today. Yeah, the cash cattle market was a little steady to weaker, I guess, Friday compared to the week before. But as you mentioned, the wholesale beef demand seems to be fairly solid here, and yet the futures are washing out. That's got to be kind of a concern technically.
Yeah, technically for sure, that 106 level is definitely a big support. You know, above 106, we got a gap to fill all the way up to 110. Below 106, it's going to be considered bearish. You're going to see a lot of increased volume around that 106 level, either up or down. You know, the option market is pricing in a little bit of a volatility swing here and there, so we're going to see how this is going to play out in the next few days here.
On the other end, you have a turnaround in the hog trade where we closed weaker on Friday. Today, they're sharply higher. And on the June lean hogs right now, if we can bring that up, we have the June up $1.15 at 76.25. That's only 25 cents from our high of the day. And July up almost $1.50 now. And we're trading at 78.47 on the day. What does that do here? When you look at this from a technical perspective, there was concern Friday on the hogs that maybe they had violated some technical signals on the chart. But now today, it's maybe like they're right back where they were.
Yeah, you know, Friday's sell-off was a very significant, you know, due to that export pipeline is rumored to be slowing down. The strong seasonal demand isn't as strong as beef demand right now. So that did spark all that short selling on Friday. But as you can see today, we recovered. We're pretty much unchanged between Friday and today. So again, we're going to have to wait and see how this is going to play out in the next few days. Traders are net short. You're going to be watching that 75 level for the lean hogs.
And all that trade talk with China, and not only could it impact soybeans, but pork as well. So I appreciate it. Scott, good to visit with you. Thank you, sir.
Thank you.
Scott Gecas of Long Leaf Trading based in Chicago.